Right, well, let's get underway, ladies and gentlemen. Andrew Stabak again. Lovely to be welcoming you to the fourth day of the New Market Virtual Market Mission, Newfound Virtual Market Mission. And like yesterday, we have got a truly stunning lineup of speakers tonight. Today, we're covering the trade and regulatory environment. Not an easy topic to discuss, but we genuinely have the markets experts on tonight, and it's going to give you a great opportunity to speak to those market experts and ask those questions that would be really hard to organise if you actually were to come here and have a physical presence, because it's unlikely that you'll be able to get these meetings very easily, and certainly all in one place. Before I do that, I'd like to welcome Claire Marriott to just open tonight. Claire has been working on this project for the last, since March, and has put so much work together with the lovely Luli Adamo from Best Case Scenario, and of course Liz Wood, who you've been meeting and working with to get all the information together. They've done a fantastic job. I was just saying to them earlier, I've done 20 years of this, and I don't think I've seen an event that's got such a high caliber of speakers together in all in one place. So Claire, I'd like to welcome you again tonight, just to have a welcome to the audience and say a few words before we kick up underway. Claire, are you there?
I'm not sure, Claire's with us. Andrew's having a few technical problems, unfortunately, so we might have to kick on without her.
Well, what we'll do is then we'll go straight to Kathy Lyle. Kathy Lyle is the co-founder of Seismic Foundry and Seed Money Australia. She's also the Director of Strategic Advisor to the Index Mortgage Company and Independent Non-Exec Director of Fintech Australia, which positions her perfectly for explaining the regulatory environment. But also, Kathy's had an extensive career in banking and capital markets, so she's got a wealth of experience to bring to this panel discussion. Kathy, welcome. How are you?
Well, thanks, Andrew. I'm sorry about that bad background there.
That's okay. That's no problem at all. Do you want to introduce your great panel of speakers and we get underway? And once again, participants and attendees, I'd love you to get involved later on in the discussion. We've got a good set of time for Q&A, but also use the chat function to introduce your questions throughout the panel discussion, and I'll see if I can weave those into the panel discussion so we get a real conversation going. Kathy, over to you.
Great, no problem. Thanks, Andrew. And so welcome everybody. Tonight we're discussing the trade and regulatory environment for fintech in Australia. And as Andrew said, it's quite rare to get a group like this together. So for those of you who are looking inwards to Australia from overseas, it's a great opportunity to really engage with our regulators who are very open and welcoming. Everybody to give themselves a quick introduction. I won't introduce myself. We have John Basilius from Hall & Wilcox. John, would you like to give a quick 1 minute on who you are, please? John, you're on mute.
There we go. Sorry about that. Yeah, thank you very much for having me. I'm a partner at Hall & Wilcox Lawyers. Hall & Wilcox is a national full-service legal firm. I sit across both the financial services team and the corporate and commercial teams at Hall & Wilcox. So my day-to-day work is primarily financial services related work, but I also do a lot of corporate commercial work for my financial services clients. Hall & Wilcox is a corporate partner with Fintech Australia, which is the peak industry body for fintech in Australia, and we're also corporate partners for Stone and Chalk, which is a bit of an innovation hub for fintechs and other startup organisations. I'm also a director of Blockchain Australia, the peak industry body for blockchain in Australia, and I'm also a director of FIBRI, which is the Foundation for International Blockchain Real Estate Expertise. That's it from me. Thank you.
Welcome, John. I'd now like to introduce Jonathan Hatch from ASIC, who represents the Innovation Hub. Jonathan.
Thank you, Kathy. My name is Jonathan Hatch, obviously. I work in the Innovation Hub as a senior advisor. I'll be the person or one of the two people you usually deal with when you are seeking to deal with ASIC from an engagement perspective, in particular in the innovation space. My background is a financial services lawyer, historically in platforms and the wealth side, but I've covered a lot of the technology space as well for some years now. And I've worked fairly extensively across the blockchain and artificial intelligence space. I'm also representative for ASIC in multiple other government bodies, and I'm also on Standards Australia around ethics and AI. So on top of all that, I also teach at 2 universities, so vary across the technical sides here. Happy to discuss any of your questions, and if any of you do have questions, feel free to reach out now or after.
Fantastic. Welcome, Jonathan. I'd now like to introduce Chris Tilling, who's the founder of Ajeka. Chris.
Thanks, Kathy. Yeah, so obviously Chris Tilling's my name. I founded Ajeka.
Your camera on, please, Chris.
Sorry. Yeah. Thank you. Yeah, so I founded Ajeka to what I see as a bit of a gap in the Australian market around servicing the financial service sector from a data and digital professional services perspective. I've been back in Australia about 5 years. Before that, I was in London for 15 years, worked across a number of the banks there. Lloyds Bank, I was at ABN AMRO during the RBS acquisition, the RBS nationalisation, and then moved into emerging markets with Standard Bank in Johannesburg. So during that period, I worked in both the investment bank, capital markets, and transaction banking. Still have very deep connections into the UK. I'm a UK citizen myself, and we're on the verge of setting up our office in London pre-COVID, which hopefully will happen next year. So yeah, very closely connected with a lot of the sort of incumbent banks in the UK and the emerging ones such as Monzo and Starling. And from an Australian context, yeah, we do a raft of advisory and implementation type activities for banks. So we integrate a lot with fintechs. We support banks in understanding how to integrate with fintechs and to third-party service providers. So this conversation is right at the heart of what I do, and I'm looking forward to it.
Thanks, Chris. Can I ask you what Ajeka stands for?
Ajeka is actually a Shona word, which is language in Zimbabwe. It roughly translates into English as clarity. So, yeah, spent many years in Africa, in and out. It's a place close to my heart, so that's where it comes from.
Well, now everyone's going to look forward to the clarity you will bring to this discussion today. I'd now like to introduce Stephanie Bampton from APRA. Stephanie.
Hi everyone, I'm Stephanie Bampton. So I'm the Senior Manager of Licensing at APRA, Australia's prudential regulator. So I license new banks, insurance and superannuation providers in the Australian market. My background is in actually financial crime policy, predominantly focused on financial crime and technology-enabled crime. And I'm a recent addition to APRA, but hopefully still have some interesting insights to bring today.
Absolutely, a recent but very welcome addition, Stephanie. And my name's Catherine Lyle. Like Chris, I spent a long time in the UK, 18 years up until early last year. I'm originally Australian. I grew up in financial markets here in Australia, in capital markets, in derivatives specifically. And I've spent most of my career building big pieces of markets infrastructure for large exchanges, or in fact trading was how I started out. The last 4 years I've had a fund. I founded a discretionary fund in the UK with 3 other partners, and we invest in very early stage capital markets fintech. And now I'm back in Australia. I'm now sitting on both sides of the pond because that Seismic Foundry in the UK is still going. And here I'm an advisor to Seed Space, which is an early stage venture capital limited partnership, and ESB CLP, which you may have heard about on some of the sessions here already this week. And we invest in very broadly fintech, but again at that very early seed stage. So now that you've met us, we'll move straight into it. I'm going to give a little bit of an overview of the Australian market for those who haven't been down here before. I know some of you may know our markets quite well, which is why you're looking at coming on shore, and others it may be your very first look at Australia and understanding it. So in Australia, we've long benefited from a very robust regulatory regime, and it's spurred a very sophisticated financial services sector across retail and investment banking, domestically and offshore. We've got very deep liquid markets in equities, in futures, in OTC, in FX, in credit, and also in commodities with a strong resources sector. We've got a very large pension or superannuation ecosystem, as you're probably aware, because it's been compulsory here for several decades, which is very different to the UK structure. Technology's always played a really significant role in financial markets in Australia. The ASX was one of the first equity exchanges globally to go electronic in 1989. And we've had a long history of very strong companies like Smarts, which was bought by NASDAQ in the compliance space, Iris, Computershare, even entities like Atlassian that are Australian homegrown, that are really doing significant things in technology that impacts financial services. Intech's driven a lot of innovation in areas like payments, and large financial institutions everywhere, and Australia is no different because we're probably a few years behind our peers perhaps in the UK, are grappling with how best to use things like AI, machine learning, neuro-linguistic programming, smart contracts, anything digital on the blockchain. So all those things are really gaining traction in regulated markets globally, and that's why it's great. We've got Jonathan here who's got that fantastic background across all those different silos within fintech. And on top of these core challenges, we've got this deluge of data. What do we do with it? How do we use it? What should we do with it? How do we protect the customer, their privacy and their data? And it's in this environment, for example, that ASIC's really kept pace with the global innovation, and like the FCA, offer a really strong regulatory sandbox that allows fintechs to test their products and services without holding an AFSL license, for instance. It's an Australian Financial Services license, or a credit license. To kick this off, I might start with you, John, if you don't mind, John Basilius. And could you please provide us with sort of a high-level overview of the domestic licensing regime here for fintechs in Australia? You're on mute, John.
Okay. So generally speaking, if you're a fintech, you're likely to be regulated by one or both of the two regulators represented here today, being ASIC and APRA. ASIC issues what we refer to as an Australian Financial Services license, and that generally relates to any financial service that is provided in Australia, but that excludes the provision of credit. And I'll get to credit in a moment. So financial services license is generally required by anyone in the financial services industry, and you're regulated generally by the Corporations Act and ASIC. ASIC also has jurisdiction in respect of licensing for consumer credit, and that license is referred to as an Australian credit license and is regulated under the National Consumer Credit Code. And importantly, that's limited to consumer credit, which is generally defined as credit provided for domestic household purposes and investment by individuals in real property. The other regulator is APRA, also represented here today. In addition, they regulate authorised deposit-taking institutions, superannuation entities, and insurers. The third regulator, where it's not actually quite a license but a registration, is the Anti-Money Laundering and Counter-Terrorism Financing Regulator, referred to as AUSTRAC, and that stands for the Australian Transactional Reports and Analysis Centre. Then you have your competition regulator, which is the Australian Competition and Consumer Commission, and your privacy commissioner as well. So that's it in a very high level.
Thanks very much, Jonathan. It's actually a perfect segue now to Jonathan, which, Jonathan, I know you've got some slides prepared, so if you want to start sharing your screen, but if you could please run us through what the role of ASIC is here in Australia, especially vis-a-vis other regulators. And we'll hand over to you now if you can get that screen up. It's all right. You're on mute still too.
That's all right. I'm just breaking it now.
Fantastic.
Excellent. I'm going to use a PowerPoint in the non-presentation version just for the sake of making this easy. But when we do presentations like this, particularly when we're dealing with others who haven't seen the regime, though John did a very nice introduction for ASIC and APRA, What I wanted to highlight for our role is we're part of the broader government regulatory framework. This is an older slide, but we like to use it to explain the role that we have. Broadly, obviously, there's the government. Many of you will be familiar with that in your own jurisdictions. The key bits I'll be pointing at here, we have the Treasury, and they are part of the Council of Financial Regulators who work with us. That also includes APRA and ASIC, as John has mentioned, and RBA. Now, I'm not going to repeat everything other than to say, in our space, we have what's called the Twin Peaks model. APRA does the prudential, and importantly, and it'll be an evolving area, they do the sector data collection at the present. There is ASIC doing the financial markets and services, as well as corporate regulator. So we are in effect the conduct regulator and do all the policing functions in those spaces. You also have the Reserve Bank around financial stability, which is less likely for the fintechs, but they do some of the payments work if you grow to the scale that you need to go into that sort of space. What I also wanted to mention, which may come into the fields over time, depending on what you're doing, is the ACCC is the competition regulator, though ASIC does manage certain aspects of that under the ASIC Act, around misleading and deceptive sort of areas. We have the tax office, the ATO. We also have AUSTRAC, which do KYC. And particularly for Europeans who are mindful of the privacy areas, we have the OAIC, who do who is the Australian Office of Australian Information Commissioner, who are responsible for the privacy side. In particular on ASIC, and I'll just jump to the next slide quickly, we are the conduct regulator. So basically, my role is I'm in the innovation hub, though there is the broad regulator who does all the financial services sort of areas around conduct, consumer credit, this sort of thing. There's also the innovation hub, which we'll probably discuss in due course. So I'll go back to you, Kathy.
All right, thanks, Jonathan. And I will come back because it'll be good for people watching who aren't familiar with our regulatory regime. That can seem like a lot of touch points that they may have to integrate, interact with. So I think it'd be good to start between you and Stephanie and John and Chris, obviously, to kind of hone that down for people who are in certain sectors. Where should they go first and things like that. But I will I'll bring Stephanie in now. Stephanie, if you could do something similar and kind of set the scene for where APRA is, and then we'll move into some questions from there.
Yeah, absolutely. So I guess from a financial markets perspective, APRA supervises authorised deposit-taking institutions such as banks, building societies, credit unions, and providers of payment platform facilities. APRA is tasked with protecting the interests of depositors. So our prudential standards are designed to ensure that under all reasonable circumstances, the financial promises made by the institutions we supervise are met. So although we have, a competition is an element of our mandate, innovation, etc., that ultimately APRA's role is to promote financial stability through that focus on the interests of depositors. Probably that's the aspect of most relevance today. So,
in a nutshell, Stephanie.
No worries. Sorry. Maybe between Jonathan and I, we can talk about the different touch points in the actual process. But
great. I'll just bring Chris in and then we might come back to you with the touch points. So Chris, you've got a career in financial services globally, lots of business transformation, technology change, regulatory compliance. What do you see are the potentially key regulatory challenges in Australia that are facing the financial services sector, and in particularly fintech vis-a-vis perhaps some of our international peers, where they're coming in from?
Yeah, so I'll probably have a slightly different slant than the other panelists on this, given the fact that we work closely with banks and fintech companies in terms of establishing platforms, ensuring that their data quality is meeting regulatory expectation. So we work on a lot of the initiatives that both Stephanie and Jonathan will be very familiar with. So from money laundering, AML is a big thing in Australia at the moment. For those that aren't familiar, Australia's been through a Royal Commission recently, which was exposing some of the limitations in the financial service sector. Very similar to what I saw in the UK, to be frank. But what that's done is it's sharpened the focus of the regulators, as they've been given more authority, and in many cases rightly so. So what that's done is it's really sharpened the focus of executives, particularly in the big banks, and how they manage their relationships and supply chains. So the bare accountabilities is one of those things where executives are legally held to account. And what that's done is it's really put a focus on investing in the things that Kathy mentioned earlier. How do you manage all the data that's floating around the system? How do you make sure that your payments are safe and they're not going to bad places? How do you ensure that your credit is fair, that hardship is managed effectively? All of those social contract utility things that I saw probably 7 or 8 years ago in the UK are now very much the forefront in Australia. So what does that mean for fintechs? Well, it's a double-sided coin, but it's largely a good story. So as the regulation has become more focused, at the same time, obviously margin compression and a focus on costs in a COVID environment has really pushed a lot of the senior executives to look at their ecosystems from a tech perspective. How do they simplify and partner well? They are increasingly looking to the fintech and the regtech sector in particular to help them through an innovation, what I see as a bit of an innovation spurt, with the ambition to really digitize their business. So they need to make sure that their onboarding slick, the AML is up to scratch, that the lending decisions are fair and understood. And in the backdrop, you've got regulatory regime that's really looking at all of those things. So I think Steffi may talk later about the economics standards which APRA now run in terms of making sure that the whole system's safe, and that includes all deposit-taking institutions and increasingly other firms that are in the fintech space. But what it does do as an opportunity is it really does those fintech operators that have a point solution that can neatly fit into a data ecosystem that provides lineage and all of those things that the regulators look for is fundamentally where a lot of the investment focus is at the moment in the banking sector in this country.
Yeah, great. Thanks, Chris. Look, I think that's a great tipping point to move into sort of a more detailed discussion on the various services that the regulators provide here. So Jonathan, do you mind, I know you've got some more slides, if you could share them, could you outline sort of the ASIC's Innovation Hub role and also provide a bit of an overview of the programs ASIC offers, including like the enhanced regulatory sandbox, which has been running about, just over a week now, and any of your recent work, RegTech work and ASIC's sort of international engagement around fintech as well.
All right, just for context for everyone listening, I do this presentation regularly. That question alone would usually take about an hour to answer. So the short version is the Innovation Hub was set up about 5 years ago with a focus on assisting the fintech community, just the fintech community then. This expanded to include the RegTech community in 2016. The focus has always been around supporting the sector's growing. We felt that it was important to give guidance, and what we do is we try and give regulatory nudges, which is effectively giving the benefit of our experience as regulators so you can better understand our expectations of you and understand the regime. Now, we won't give legal or commercial advice because if nothing else, you don't really want to be asking the regulators for that. You want to be getting your own advice from professionals who are insured and appropriately supporting you and can work through your facts in detail. Instead, what we try and do is let you understand the regime and you can work through your thinking on how you want to engage with the models. Now, we do this as a free service. You can just approach ASIC via the Innovation Hub website and email us or email us directly. And we do different events sometimes as part of that, as part of our broader engagement. Fundamentally, the challenge for us as a regulator has always been the same though. We won't compromise our core mandate. We focus on supporting the fintech and the RegTech community while ensuring we still promote consumer protection, investor protection, and confidence in the markets, who we expect and try will continue to ensure operate in a fair, orderly, and transparent manner. Now, this is just part of the work of the Hub. The engagement bit I've mentioned is where we make senior staff available and you can work with us. Now, we don't do the full incubator. We aren't resourced to do that. Instead, we do it more around supporting you by letting you understand what we're doing and particularly around our thinking. However, we also have a lot of international engagement, as Kathy's alluded to, where this might include things like the 16 international agreements we have. But in recent years, we've also expanded that to focus more on multilateral work around the Global Financial Innovation Network, for example, which is effectively an international sandbox, but also has information sharing between regulators. There's the more formal IOSCO arrangements, where some of you may see we occasionally publish reports going into different regulatory work around the world. And no, it's not international standards, it is consistency in regulatory thinking to make it easier to develop and grow your business models internationally, though that's not the only reason, of course. And we also have a range of work around how ASIC actually is going to be developing policy in the future. So some of the early policies I've developed and worked with others, and we apply that more broadly so that you can come into Australia or other countries where, say, you're touching Australia, and work with the regulator and understand our regime and how it fits with other countries, as well as how it fits with your traditional context. Lastly, on the expanded regulatory sandbox, just for context, we had a white label waiver, which is effectively ASIC exercising its powers to give a range of small exemptions under our relief powers for a testing environment. So this was around allowing people up to 100 retail clients under a $10,000 limit to test their technology, do things like proving to a VC that they can operate, or prove to banks that they want to work with if their system works. And then you can go on and seek proper full licensing. As I said, we won't compromise our core goals. We aren't empowered to do that. The government has expanded that to the expanded regulatory sandbox, which is set out in our information sheet 248, if I remember correctly. I always forget the number. And it works around the idea that you can have up to 10,000 per client, under 5 million. Mostly it's usually around 100 client limits. There are some exceptions depending on what you're doing. And you can work with a broader testing environment. Now, you're not going to run a full-blown bank in that sort of environment, but you can start learning the systems, working with the regulators, work how you're going to progress, and then through the international trade bodies or however else you may be coming to the country, perhaps under your own work, you can develop the contacts in the network and develop your presence in Australia as you grow. Happy to take any questions on that, of course. Back to you, Kathy.
Brilliant. Can you give us an update on how the new enhanced sandbox has been going? Because I know it might be early days yet.
It's 7 days in, so that's the update as mentioned earlier. So can't comment on anything at the moment. The only thing I can say is we have indicated that there's a 30-day period as set in the legislation. Nothing can be discussed in that period as mentioned.
Okay, yeah, thank you. Fair enough. Might bring you in here, Stephanie, and touch on licensing. You're the Senior Manager of Licensing and focusing on balancing sort of APRA's mandate for innovation and competition alongside all that safety and protections for the financial services community. Could you provide some insight on navigating the regulatory complexities in Australia and also the kind of process to obtaining a new bank license?
Yeah, absolutely. So I guess we recognise that new applicants are navigating multiple regulatory agencies in Australia as a first point. And exactly as Jonathan said, you know, APRA can't give advice for the mandates of other agencies, but we do absolutely have interconnected teams. So when you're engaging with APRA, although we can't give advice on the other things that you'll need to do in conjunction with an APRA license, we are able to, you know, have the right conversations at the right times to at least make sure that things are kind of somewhat in alignment when it comes to actually granting the license, etc. at the end of the day. But from an APRA perspective, probably the biggest and most significant change that we've made to accommodate the increased interest in obtaining a license in Australia, banking license, is to establish a central and dedicated licensing unit within APRA. This actually didn't exist 3 years ago. And this has allowed for a more consistent and structured process. The focus on the process is being collaborative and iterative all the way along with the applicant. So I'll probably speak more about this as we go along because it's the most fundamental advice I can give. And that is that engagement with us consistently through the process is not a case of applying and then we go away and just think about all the documents that you've submitted. We have an emphasis on a pre-application engagement phase where we offer, it's not mandatory, but that's our preference to go through it, to give feedback on significant issues early. So rather than spend a whole lot of time doing all the pre-work, we can actually give advice early on to assist in the process before there's too much time, money, etc. invested going down the rabbit hole, I can see. From a broad perspective, licensed applicants are assessed against APRA's prudential standards for all ADIs. So in this way, applicants are held to the same standards as incumbents. We would think that's important from a competition perspective. In that angle, we work with applicants to develop their internal policies to be compliant with the prudential standards, and the policies, we would want to see that the policies are in place to be used by staff on a day-to-day basis in the operations of the entity, and not just produced to meet APRA's standards. We see that as a bit of a waste of time. So in this way, by us giving assistance at this point as well, we are actually developing an organisation so that they can be fully functioning as a licensed entity in Australia. I'll focus on how we facilitate this entrance without lowering standards. A process was introduced a couple of years ago whereby there's a choice of routes to a full ADI authorisation. So applicants can apply directly for an unrestricted licence, which takes a little bit longer, or pass through a restricted ADI, authorised deposit taking institution phase on the way. And the framework is intended to allow applicants time to build the capabilities and resources, and perhaps assist in raising capital as well, because it creates milestones then that an organisation can go through. To us, we think this is the biggest, single biggest way that we can assist in, in entering the market, because obviously the capital requirements, etc. It allows a period of time where you're not held to the same account as well in terms of the prudential standards, so that you can test systems, etc. Without having the full extent of the prudential standards being applied. The process that we've introduced has ultimately sped up the application process. We realise this is an important aspect for startups and the inevitable capital burn that's experienced. And probably from an internal perspective, we would say that we have challenged ourselves to be more open-minded towards unprecedented or different new proposals that push outside our usual comfort zone. I'm sure others might have a different view on that, but genuinely I would encourage my branch to have a mindset of looking for a way to say yes rather than looking for a way to say no. Obviously, within the context of our frameworks, and there are some core prudential issues which we can't compromise on, governance standards being a good example. But on the whole, I would say that the process now, as it's in place, is actively encouraging innovative approaches, and particularly where we recognise that they bring benefits into the banking system, not just from an entity level basis, but fundamentally overall.
That's fantastic. That iterative process too of engaging early, as you said, it's obviously shortening timeframes, and we can see it happening in our ecosystem already. Right, with there's several neobanks out there now, and other types of financial licenses. Since you embedded that process about 3 years ago, how many new entities have you seen being approved through the process, roughly?
Yeah, okay, overall, I think off the top of my head, talking ADIs, potentially 7 or 8, but through the restricted phase, I believe only 3 who have now gone on to receive a full ADI license. So Volt, Zinger, you may be familiar with.
Yeah, brilliant. Thanks, Stephanie. Well, someone who can offer advice is John Basilius from Hall & Wilcox. So, John, could you just cover from your perspective the innovations like the enhanced regulatory sandbox, potential things like operating through third-party licenses? Do you need to license? Who does, who doesn't? And any specific exemptions that might be available?
Yeah, sure. So when I spoke earlier, I was talking about circumstances in which a license is actually required. Now, there are situations where a license is not required, and they're different under the different regimes, but I'll focus on the key ones that are more likely to be relevant to fintechs. So the first of those and most common is being appointed as an authorised representative under somebody else's license. So when I say being appointed under someone else's license, typically for a fintech, that might be a situation where you're white labeling a payment product and you're partnering with someone else. So that someone else would typically have a license, and they might authorize you under their license. Or there are third-party licensees whose business it is to effectively allow you to hire out their license and work under it as an authorised representative. The next exemption I'll go to is the Enhanced Regulatory Sandbox, which Jonathan touched on a little earlier. The Enhanced Regulatory Sandbox actually applies to both the Financial Services Licence and the Australian Credit Licence. And it gives you a 24-month period to effectively test your product or services. But it's focused on innovative products where there's a public benefit. And on that basis, there are 2 tests that need to be met in order to be able to rely on the Enhanced Regulatory Sandbox. And the first test is that there's a net public benefit. And that basically means that the benefit of being able to provide your product or service over that 24-month period to test your product outweighs any detriment to the public that will result from exempting the service. And then there's the innovation test, and that requires you to demonstrate why each eligible financial service or financial product or credit activity is considered either new or a new adaptation or improvement of another service. One of the issues with the sandbox that you should be aware of is it generally does not cover the issuing of a product other than with respect to payment products. So that's an important note to be aware of as well. Another thing to also be aware of is if you're a fintech in the non-consumer credit space, then there are no licensing requirements that apply, and therefore you can operate without a license for business lending, for example. However, you will still need to register with AUSTRAC as a lender and comply with the anti-money laundering and counter-terrorism financing laws. There are a couple of non-cash payment exceptions from needing a license, which are particularly relevant to fintechs. The first and most relevant of those are electronic funds transfers, where there's no standing arrangement between the client and the person sending the funds. And the sending of the funds results in receipt within 2 days of the payment being initiated. So a lot of payments these days can fall within that exemption and do not require a license at all, provided that from the initiation of the payment to the receipt of the payment, it's no longer than 2 days. There is some caveats to it being a little bit longer, but I think as a general rule of thumb, you should work on the basis of the 2-day period. There's also a specific exemption for what we refer to as low value non-cash payments, and that's a specific exemption provided by ASIC, where the maximum balance of consumers' balance on the product is no more than $1,000, and the maximum aggregate balance on all facilities for all clients is $10 million. That's in a nutshell, they're the main ones. There are some other exceptions that might be relevant to your circumstances, but you should seek specific advice on your particular circumstances.
Jonathan and Stephanie, did you want to add to any of those comments at all? You're fine. If not, I'll move on.
Only I would add, and like these are things that different people discuss with you, but it's quite frequently the case that when someone approaches the Innovation Hub, even though we can't give them legal advice, we might point them in the direction of, say, RG 185, which is the guidance for the non-cash payment facility. The point I'd make is that a lot of the time it's a matter of working through what's necessary for your circumstances. And that's where you probably need to seek either legal or commercial advice, or at least deal with people who know the regime well, rather than just trying to work it all out yourself. Understand the regime. That's where I, Stephanie, and others can come and be helpful, but you need to have a good comprehension of what you're doing just before if it's finalised. Just have to always check that sort of thing.
Yeah, thanks, Jonathan. Stephanie?
Look, no, the only thing I would say is that it's such a high threshold for an APRA license, so we can pretty much give advice early doors whether a license is required through us.
Brilliant.
I can see that it's more complicated from an ASIC perspective.
Yeah. Look, licensing is just one aspect of regulatory compliance. Chris, what can fintech companies do to best manage this evolving regulatory landscape, especially the compliance landscape, bearing in mind that most on this call are already operating under another jurisdiction?
Yeah, that's a great question, because obviously, the clients that we work with are grappling with this all the time. So I think both Jonathan and John sort of touched on it. The working closely with the regulators is obviously very important, and forming that relationship to understand what's involved in terms of the evolving regulatory landscape. Having the capability to be able to ingest it all is quite a significant undertaking, particularly for small firms. We have research people in our company that look through the regulation, and a current focus really is on the consumer data rights legislation that's come through, and what that means for fintechs. I'll just sort of touch on that if I may, Kathy, because it is quite relevant to the audience. I've been fortunate enough to sit in on a number of sessions with the chief negotiators from both Australia and the UK on the free trade agreement, which is going to be a quite ambitious build out of what's already existing in the fintech bridge that exists. I think that's quite exciting. Consumer data rights is also very politicised. Scott Morrison, who's our current Prime Minister, really pushed it hard after the Royal Commission when he was Treasurer, and there's a lot of motivation to keep competition as open as possible in Australia. Where the consumer data rights from a commercial perspective is a little different to some of the other jurisdictions around the world. Obviously, it's behind on the UK, and the read and the right capability to initiate payments is probably less mature, but the ambition is bold. So after banks, to Kathy's previous point around superannuation, which is pension fund management, so that's a $3 trillion business under management. It's enormous, and it's ripe for innovation. It's one of those industries that will benefit a lot from what's called open data, which incorporates open banking, but also utilities, telcos. So there's going to be a very interesting couple of years for that space in Australia. So we're just at the back end of a parliamentary inquiry into how it's all going. I think some of the feedback is how we educate the Australian market around what it means. I think that needs more investment and work. And for fintechs themselves, there was quite a lot of, I suppose, pushback on the cost of actually becoming an accredited recipient of data. So all ADIs, all the banks and those deposit-taking institutions have to cough up the data when an accredited recipient asks for it, based on consent from the customer, of course. So they've gone through a formative process around that, which allows them to do a streamlined application for accreditation to receive the data. Now that's caused some issues around it being a bit of an unlevel playing field. The cost of doing it as well has been talked about. It's about $100,000 for a lot of the fintechs to get through all of the insurance hurdles and so on. So the good news is that the ACCC, which manage this, yes, another body, but they are listening, the government's listening, and they're looking at various ways to reduce the burden on fintechs, and particularly how to open up the open banking regime to not just effectively be a data sharing platform, but to be a much more innovative space in regards to payment aggregation and other things. So I think one of the things that is really on the tips of the tongue of the clients that I represent is how does that relate when they actually integrate with big banks and second tier banks, which are predominantly the ones driving a lot of the innovation and support for open banking. And I think being able to keep up with the changes in the legislation is important. So just to close out on that, a number of the people that I deal with in Australia in the fintech space are native Britons. There seems to be a lot that have come through, and there's going to be a lot more with open banking. And I've asked them previous to coming on this panel as to what are the things that really they would provide advice to people coming over. And one of them is to really understand the local landscape and to partner where possible. so that they've got a bit of a leg up as to how things work, and to make sure they've got some sort of starting Aussie dollar cash flow position to support. I think Stephanie mentioned on that a few times. So all in all, it's an evolving beast, but the opportunities, particularly around the space around AML, payments in particular, and the confluence of the gross real-time settlement, which is not called the NPP, New Payments Platform, and comprehensive credit, means that there's an enormous opportunity for people to offer something different. So yeah, I've sort of answered that, Kathy. I'm
no, you have. You've touched on some really key. We've only had this 45 minutes, and there's so much to cover. So that was fantastic, Chris, because you jumped to some things I wanted us to get to. We're meant to be moving into the Q&A now, but I would like to cover one more thing, if I may, because it's it's pertinent to some of the companies listening in. And you Chris, you referenced the lag that often happens between new innovative digital products coming online and the reality of our regulators in the current environment, that they seek to operate in, having to catch up. And you referenced this too, Stephanie. So I wondered, you at APRA, you've recognised that innovation's driving change in areas like the stored value space. Can you provide some insight, for instance, on the current thinking and the direction in those areas, please?
Yeah, I can. Look, ultimately, it was long recognised that especially in the payment space, was far ahead of the legislation. And last year, the Council of Financial Regulators Agencies were aligned. There's a paper out, unfortunately, cutting to the chase here. The government is still to make a decision on where we go with it in terms of legislative changes. But in terms of the challenges we're trying to resolve, we would expect that the changes, and this is aligned across all regulators, because the framework currently is across multiple regulators, that's the challenge, is that any change would see a focus on simplification, making it easier to navigate for industry participants so it's actually clear where they fit in the framework. International alignment to create consistency with more familiar terminology and existing concepts. For here, you would look particularly to the current FCA requirements. And it would be, from an APRA perspective, or actually across the framework, an activity and risk-based model. So where there's less risk and less regulation, we absolutely want to see less regulation in this space if possible. And from APRA's perspective, that's only at one end. So large providers of facilities that have bank deposit-like features. Either way, in the APRA space, we look at our internal standards anyway to align with that. But ultimately, that's where we would hope to go across regulators as well. But we're not quite there yet.
Yeah. And nor are many regulators globally, but I think Australia's doing a great job. We're catching up in many ways in the fintech space as far as the ecosystem is concerned, and we've got the opportunity with things like open banking to actually learn some great lessons from overseas, UK in particular, and I think we're doing that. I think we'll call the panel to a close there because we've touched on some really excellent areas of discussion, and we'll move into a sort of a more Q&A, and I can see some questions coming through. Andrew, I'll just hand back for you to kick off that next session, and then I'll moderate that. Thanks.
Great, thank you, Kathy. Look, for the attendees, now's the time to start shooting us the questions. We've still got a few questions to get through. One there that I'd like the panel to maybe explain. And let me say again that getting this level of panel together is fantastic. I've run, as I say, conferences for 20 years. To have this level of speakers available to you is a rare thing. The other thing I'd like to say is that in the last year or so, I've definitely had a lot of bankers say how complimentary they've been of the regulators in this last couple of years. They really have been positive about the support that the regulators are in getting back to them, also offering support for fintechs and startups. And this new regulatory sandbox, I think, is another sign and indicative of the support that the regulators are giving the industry. A quick question on the new regulatory sandbox is that what have you learned in the first instance of the sandbox that you've brought, which are changes to the new regulatory sandbox that you brought together? What are the things that you've learned?
I'm going to assume that one's directed towards me.
It is.
I'm going to have to first explain the context of it, that the existing one, or the ASIC sandbox, was set up by ASIC using the powers we have under the Corporations Act. The new one is actually set up by the government, so they're not a learn and develop process. It's here's one regime, here's a second regime. Technically, there was actually even an overlap while the old one was being removed through the gazettal process. So they're actually two separate regimes. They're basically in response, the broader one was done by the government in response to feedback from industry about wanting broader, longer testing periods, a different range of products or a different product mix, and some people wanted to revisit to do one product and then pivot and do something else later on. So there is a range of features that come through, but it's not so much a learning process. I mean, if the best way I could describe this to you is there's two perspectives. I'm going to say this at a high level. But one, that the feature that most people in the industry that Andrew's probably alluded to really like with the innovation support function is the innovation hub itself. The sandbox is just one of the tools we use to facilitate fintechs operating in this environment. There are a range of other ones. So an example is the non-cash payment facility relief that John made reference to before. That's just one of the many tools we have in our war chest, so to speak, that we can use to work with fintechs or regtechs as they grow. The other perspective on this, and from a less academic perspective, is if you look at things like the interim fintech and Senate estimates, fintech and regtech committee, they've discussed the different options around what sort of testing environments there are, and they have looked at the sandbox. They like the work of the hub from what I've seen. I haven't said a lot around it, but they are looking at other issues that are broadly part of the fintech regime as a whole, not just in ASIC or APRA's ambit. So there are some challenges. An example might be that tax regimes are different and you need to get advice, and someone like John or one of the others will give referrals to someone who can give that sort of advice. But there are a range of sectors you step through. We and others can refer you as well in terms of just reference to the different bodies. The challenge though at the fundamental level around the sandbox itself is it's still a testing environment. So we have had officially, I think 7 people went through it and probably 10 times that inquired, which by international standards actually is up there. The new sandbox, and part of the reason I had to stonewall Kathy's question a little bit before, has a 30-day testing period and assessment period where I and no one else from ASIC can comment on it publicly while those applications that come in early, if there are any, which I can't confirm or deny, are assessed. So we have to work through it. It's a little bit more like a licensing regime, but it's not quite there. So in terms of people coming in, it requires a bit more planning, a bit more thinking, and I would strongly encourage those people, as I said before, engage with us first. Don't just fire something at us randomly, because I find that's a really good way to waste a lot of money. There are often many, many options, as I said in the war chest. Sandbox is just one. And if you do want to discuss those sort of things, engage with us and we can discuss how you want to proceed.
Okay, that's a good and detailed answer. I don't think we could ask for better than that.
No,
one
exactly.
that I thought,
I've been
go on,
backwards
Kathy.
and forwards. Sorry, been in the UK the last 18 years, and I've been backwards and forwards a lot for various businesses. And I can attest to the engagement and openness of our regulators here in Australia. It is easy to get meetings. They're very welcoming and they bring people in that are relevant to the topic you might want to discuss, whether it's licensing or something else. And I've always found, no matter who I was bringing with me and whatever business it was they were looking to do, and how perhaps contentious or complex it was, there was always a meeting available with the right people there to give the right advice. So I strongly recommend that fintechs coming over do that. There's some questions here on the chat, Andrew. So
yes,
do you mind if I ask some of those?
Jump straight into it. Do you want to take them through, Kathy?
Yeah, absolutely. So the first one's kind of a big picture one, and it's to the whole panel. It's talking about the difference of a principles-based regulatory environment, I guess, as opposed to a very black and white regulatory environment. And what does that mean in reality for startups coming into the Australian market where we do have that very principles-based environment? Perhaps start with you, Jonathan. It's a bit general, but I'm not sure who sent it.
I'm happy to start, but were you referring to John there? John, you were off mute, so I'm assuming you want to start.
I'm happy to answer that. So what we have under the Australian Financial Services licensing, and to an extent, I believe, under the Australian credit licensing regime, is what is referred to as a scaled approach. So what that means is that the extent to which a behemoth bank needs to comply with certain requirements is a lot more detailed than what a startup would need to. and the resources required by a bank are expected to be a lot more than a starter. So I think that having a principles-based licensing system, which allows people to meet their requirements on a scaled basis, which basically means you look at the nature, scale, and complexity of your business to determine the extent to which you need to meet relevant requirements. I'll just throw it to the regulators to see if they want to add anything to that.
I might take a slightly different approach because I'm going to be biased and say this is actually what I teach in the law schools. Short version is when you have a principle-based regime, that gives certain flexibilities. However, a lot of the time when you're looking at the fintech and regtech community, it is harder to code for things like but-for and reasonableness tests. And there's a bit of a balancing act between, as John said, if you have a scaled approach or a principle-based regime, this might say that you need to hit certain criteria based on the scope or the scale of your engagement with the broader economy. Whereas other regimes might be you do this or X, which means it's very easy to have a checklist approach. Whether each one's right or wrong is a subjective call, and economies go through different stages of, or cycles, if you could call it that, of going more towards principle black letter law, or more codified black letter law versus principle flexible law. That will change over time. In Australia, we have a bit of a mix of both. It's actually a good thing. It may be frustrating at times when you can't easily get a clear black and white answer, but that often means you can find a solution. Because if you did get that black and white answer, it may not be the one you want and may not let you do what you need to do. So there's a range of solutions. And again, understand what your options are and work within the system. And it does have quite a range of solutions.
Yeah, Jonathan, Charles Luttrell once explained to me that that's why America basically doesn't work from a regulatory perspective, because they can always throw more lawyers at a black and white law solution and come up with an answer that nobody expected, but there it is.
And they have 51 separate regimes.
Well, there's that as well. Trying to get them all in a room in Vegas is always a difficult thing because there's a lot of politics involved. But anyway, I digress.
And Stephanie, that plays to your comments earlier, about looking for ways to say yes, but operating under a regime like this.
Indeed.
Absolutely. I don't really have anything to add on that.
Yeah. Okay. Look, there's another question here directed to you, Chris, and it's if fintechs, it's a technical one, if fintechs are already access Australian consumer data via existing aggregators like, say, Plaid or Yodlee, is ADR registration currently optional? And the second piece is, if so, given the current hurdles and costs, should fintechs just wait until the ACCC makes the application process more accessible?
Yeah, it's a really good question, Jason. Look, first and foremost, part of the issue that has been communicated to the ACCC is, at the moment, the CDR has a single level of unrestricted, known as unrestricted level of accreditation. And for the existing ADIs, they largely fall into that by default because of the pre-existing prudential requirements that are met that Stephanie just mentioned previously. So I'm just reading a question now. When it comes to accessing an existing aggregator, where the issue of use of data and transfer of data is probably less clear is in the space of screen scraping. It's one of those things that coming back to Australia and seeing it so widely used, I've always been a little curious. Now, the intention is that will get phased out once the open banking framework is implemented across the sector. At the moment, it's still in place. So to sort of answer your question, if you wanted to use, obviously Yodlee is firmly in that place. The model itself, if you look at the way that is envisaged, there is holders. There is obviously, from an accreditation perspective, there's holders and recipients. What it less talks to is the intermediaries in between, which are much more common in the UK, and how they should be governed. So the current process at the moment is to look at reducing the second half of your question. When do you wait to actually make that application? The ACCC is looking at ways of actually tiering the level of the accreditation. So it's not a one size fits all. And by that, it means how much accreditation hurdles you need to go through, and particularly in terms of proving out the security nature of the solution that's being presented, and the insurance that's then required to keep it safe, will actually be directly related to the amount of risk that's perceived with the use of the data. So data that's aggregated and doesn't have personal details in it will have a much less stringent entry level than those that are very much at the customer transaction level or trade level. So it does depend. So to answer your question, I think the pressure on the ACCC to open that up is there. It's widespread, and it is actually supported by the big banks and the regulatory regimes. I think, to Kathy's point, even before COVID, there's quite a universal push to grow financial services in Australia, and quite a lot of alignment, which is really encouraging. I think this is something that needs to be addressed quickly, and by all accounts, that's the case.
Thanks, Chris. We've got another question in the Q&A room from Alan Giles. He said, thank you to the panel for some fantastic insights. Very much appreciated. The question is, how do regulators think about bridging the gap between regulatory requirements to capture communications between trading participants and the privacy concerns of the individuals themselves, particularly with the prevalence of consumer-based communication tools that are sort of overtaking traditional enterprise chat tools in those large financial institutions?
Interesting question. I'm assuming that'll fall to me. Now, yes. I'm going to caveat and say I'm not as well versed in the market space because I'm actually a superannuation workflow by background. However, having had quite a few entities come by the Innovation Hub to discuss this at different points within the RegTech space, it is a spectrum question from, as I understand, internationally. And in many cases, the institutions who are using these sort of RegTech services are operating in multiple countries. So it's just one of the things we have to work through multiple regimes. I have been told, without knowing for certain, the Americas have a tendency to take the approach of record everything and just make sure everything's controlled. And you have rules such as employees only have the work phone. I'm not saying that's good or bad, I'm just observing that's what I've been told. Alternatively, other countries take much more pro-employee style approaches around certain structures. The final call will hopefully come down to a government call, which is going to be beyond a regulator to make, and that's something for the government to work through, and regulators like the OAIC will be better to speak to that. Where it will get interesting from a financial services perspective is if people are trying to work around the legal and regulatory obligations by using other legal regimes to try and do that. That'll be something to be worked through over time. From what I have seen of the RegTechs coming into that space, and we have done natural language processing trials around voice analytics in the insurance space, but we were looking at ASIC to RegTech trials around some of the broader voice analytics work. Is it's going to be a challenge going forwards that companies will probably come to solutions for. I mean, a lot of people like to say regulators are behind the scenes, not are behind the regulatory changes, and sorry, I should say behind the progress. I would disagree with that often. Often what we've allowed people to do is develop and innovate themselves and then step in as needed. Again, similar to early answers, there's a spectrum of how a government responds. Australia generally seems to like, as an observation, to work as a fast second mover. So we'll work quickly as things come in. We won't try and front run the innovation because that may limit or stifle the innovation. But there'll be different degrees in different areas. So in terms of the actual recording for voice analytics or recording for other areas, that's something that will be evolving over time. And I suspect many companies will probably be the first ones to act on that because you think they would want to maintain that for the purpose of their own market licensing and whatnot, as well as their own compliance obligations. And if nothing else, there's always going to be a question of are people going against the company itself or its clients? So there's no absolute clear answer. It's something that just needs to be worked through probably good quality legal advice, as well as working through any of the challenges that come up as you work with employees and others, and just being honest and open to everyone you're dealing with. I know it's not a direct answer, but it does sort of cover the spectrum internationally.
So Chris or John, have you worked with any companies working in this space at all? Have you got a viewpoint from the UK to Australia perspective? I throw in your curly one, Chris.
Sorry, Kathy. So
I just wondered if you had, if you under Ajeko had worked with anybody in that space. You know, so in the UK, there are a lot of companies that are have various ways of recording communications, and they're not all they're not telephone based, right? So they're pulling up WhatsApps, they're pulling up all the chats, anything that a trader and a dealer will use to communicate with a client. Those forms, those avenues of communication have expanded dramatically over the last 5 years. So it's a pertinent question, because it speaks to a lot of things in financial services that we're looking to have transparency on and to regulate.
Yeah, so I think from my experience, it's a double-sided coin. So there's some, if you're in a trading room, there's rules in a lot of circumstances around technology that can be used. But more broadly, I think the challenge for the clients I see is how you actually utilize all of those customer interactions. So I think it was touched on earlier by yourself and Andrew around the proliferation of machine learning and artificial intelligence. So, we do quite a lot in that space. We've got data scientists ourselves in our company, and how you utilize unstructured data to do things, and how the machine learning is managed in a way that controls unconscionable bias of the machines and the models that are built. And that is no more pertinent than when it comes to using both social. Many of the banks around the world will use social for credit scoring, for instance. So I think when it comes to using some of the different forms of medium of exchange of communication, ideas and transactions, there is a real ethical and moral challenge that's coming up. I've worked with banks that will look through all sorts of relationships that people have on Facebook, for instance, and we'll be able to determine from that certain outcomes which they would perceive to be, from a risk perspective, pretty found, but from an ethical perspective, you can argue otherwise. So it's a really we're not I didn't want to go down that, but given the content of the meeting and the presentation, but I could talk for hours about it, because it is, I think, the next frontier in the fintech space, in particular. A lot of banks are utilizing this technology, and the legacy infrastructure that they have to support it isn't keeping pace with it. So that's even before you start thinking about how organizations ethically manage the data.
Yeah, absolutely.
I think that's Alan's bet as well.
Yeah,
there is one question that I've shot to Stephanie, and it's one that I've experienced over the years, and that is that APRA has an active role in regulating the Australian-based New Zealand banks. But the question is, are they active in other parts of the financial services there in New Zealand from Australia? Is there any broader reach than the major Australian banks that are based over there in New Zealand, Stephanie?
Good question. I actually couldn't tell you, to be honest. Yeah, where there's a subsidiary, of course, APRA would have a relationship there, but I'm not sure about the reach of that, unfortunately.
Okay, no problem, no problem. Okay, now have we got any other questions there, Kathy, before we wrap up this panel? Because we're just about on time.
We are on time. We've done very well. There are no further questions from those listening. I did want to chuck in something about, because it's a trade and regulatory panel, about the free trade agreement. But
please
perhaps,
go ahead.
Why don't I let everybody have a minute each to close on just one or two key points they would like people to take away from this, or comment on what they would like to say to the FTA going forward. Let's start with you, Jonathan.
On the FTA, I think it's probably what I'm going to have to say, probably not something we can officially comment on. That's, though I'm aware of some stuff in the background, not appropriate yet for us to really say much more. The only other closing comment therefore I'd add is those wanting to engage with Australia, please feel free to Google ASIC's Innovation Hub and reach out to us. The contact details are there, along with a range of key information that could be of use to you.
Thanks, Jonathan. Stephanie.
Thanks. Likewise, I will keep mine to more a holistic response. And that is, again, to reiterate that to get in and talk to us early, and we're happy to kind of give that advice along the way. And also from a UK perspective, to get local help. That's something that we've seen time and again when entering the market here, just the differences between the jurisdictions and, as we just already talked about, rules-based, principles-based complexities. So those two things, I think, engage early, get local help, and also the APRA website has lots of really useful information on it as well. So good resource.
Thanks, Tiffany. John. Are you there, John? You're on mute.
I think John's having some technical issues there.
First and foremost,
yeah. I
Can't hear you, John. Sorry. In that case, I will leave it to Chris for the final word.
Yeah. So the free trade agreement's going into the second round in September.
okay, can you hear me now?
That's better, John.
So
We'll get you to follow after Chris. Just one sec.
Okay.
Yeah. So for those that aren't familiar, the first round of the negotiation has concluded in July. The second round is in September. There's the usual sort of niggles around agriculture and things like that. One of the things that was mentioned, particularly when it comes to the financial services sector, was the free movement of people. And that's one that they're working as a collective. Obviously been tough for them because they've all been virtual, but it's very strongly represented. George Brandis is one of those people that's representing. It's pretty well progressed. The intention is before Christmas to move it to a text-based conversation. This is the printed stuff that we're going to commit to. And what it does obviously mean for financial services is the two things that they're looking at is the harmonisation of data and digital standards. So that's something I've sort of been pushing for as well, is to say, well, you know, if someone wants to bring a new technology or something to another jurisdiction, in this case, Australia and UK, a lot of the challenges are interpreting legislation and the data that's required to support such technology and innovation. How do we make it easier? How do we get closer to common standards so that that barrier to entry is reduced? And in terms of digital standards and digital trade, that's something that's at the forefront. So yeah, look forward to seeing how that goes at the back end of the year.
Indeed.
Thank you.
And John, final words from you.
Yeah, sure. I don't have any comments on the free trade agreement, but some pointers for people that are sort of looking to make a move into the market. And I'm not saying this just because I've got a vested interest, but you've got to get a good lawyer, you've got to get a good accountant, and you've got to have good people on the ground. Yeah,
I think that you're getting those trusted partners. It works no matter where you are going in the world, right? UK to here, New Zealand to here to Singapore. And very sage advice. Look, I just want to thank everybody. And Andrew, it's been a fantastic panel. We've touched on an enormous amount of topics. And as you can see, there's more to unpick there, but I'll hand back to you, Andrew, and thank you, Jonathan, Stephanie, Chris, and John.
Right. And I'd like to also thank the panelists and Kathy, you for chairing what's been a fascinating panel. Such valuable information there. And as I say, if you were to fly out here and try and organise that, that'd probably take you a week if you were lucky enough to get each one of these speakers, if at all. I doubt you could. So well done. Thank you so much. And Kathy, you also perfectly segued into the next session, which is on in 10 minutes time, and that is the free trade agreement. We're going to talk about that. We've got Justin Howden from the H&H Group, David McCready from the British Chamber of Commerce, Michael Ward, and also Dan Tebbett, who's the Assistant General Manager of Austrade. So another brilliant panel. I suggest all of the attendees stick around. We're going to be back here in 10 minutes. We're just going to have a 10-minute break to give yourself time to freshen up, and then we're going to launch into that session, opening with Claire Marriott from Newfound. So I'll see you all in 10 minutes' time. Thank you again, panel, and thank you, attendees, for all your great questions. See you in 10 minutes. Thank you.
Thank you.
Bye.
Thank you.